Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, as we take a look across the board here, slightly neutral to up day, where we really saw the big fireworks was on the NASDAQ after Apple reported earnings on Wednesday, or I should say Tuesday evening. That gapped up that entire tech index there. But we also had the Fed rate announcement here today. As expected, no change in the rates. And we pretty much had a flat close on all of the other major indices minus the NASDAQ. If we take a look at the crude, it was also a crude inventory day on Wednesday. Crude experienced a slight bid. And the gold and the bonds here, we'll take a look at those charts, pretty much flat on the day as well. But as always, let's take a look at the S&P 500, starting off with the daily charts. So folks, still no resolution here in terms of trying to get back above those 2280s. That's this level right here. Now, we did break up above it about 2 or 3 days ago, and we immediately gapped right back down below it. So folks, one of the first things I had mentioned to our video watchers here is that that's potentially a problematic sign. Usually you do not want to undercut a breakout zone as soon as you break out of it. It kind of signifies that there's still potentially some sellers up above and that there really isn't demand down below. And even today, or on Wednesday, we saw this gapping up on the backs of earnings, the Apple earnings, and then it just faded all throughout the day. You can see that here on the charts, right? The big gap up. Here's the big gap up, and it just faded the entire day. And to me, that still signifies that there's some sellers out here. We may still have to wait on the Amazon and the Facebook earnings, which are coming out later this week. But as far as the S&Ps go, really the place now that I'm going to start watching, if we really can't get above these 2280s, like even here, we tried to pop above it, have not been able to stay above it. If we can't get back above and break some of these prior highs, what I'm going to start watching now are these 2270s. 2270s, these are 2 times tested, so that should offer some level of support, and we'll see if there's buyers still there. And then the bigger one down here at the 2260s, multiple areas of support in that region. So if for some reason over the next couple of days we start to fade off and encounter some weakness, the 2270s and the 2260s are going to be the 2 places I'm watching. And then obviously if we get back up into new highs, back above the 2280s, we're still going to continue looking for long-sided trades. So that's what we're seeing here on the S&Ps. Let's move over to the NASDAQ here. So taking a look at the NASDAQ, strong day, and in fact, if you take a look at the dailies and see the RS, the relative strength, we can see the relative strength is hitting new highs. Okay, new highs, and that represents that this is where the bids are coming into. So people like the big cap tech again. Remember, it kind of took a bit of a hit back in October, November, right before the election, and it's taken some while some time here to get back up into these new highs. But all we have here is a series of higher highs, higher lows. We're managing to stay above those 5600s. And even when you look at that last breakout here, we didn't actually undercut it and stay below it, right? We actually just came right down to it, kissed it a few times, and then bounced above it. So folks, I'm looking for any sort of break above those prior highs when it comes to the NASDAQ. And speaking of Apple and Apple earnings, let's take a look at the Apple, because here's that big gap up on earnings, right? We don't play earnings, but here's just one of the things that we look at is, folks, when we see this, we had called out this cup and handle about 3 or 4 weeks ago. We said, hey, look at that. It's starting to break out. And here we are, a stock that's under accumulation. We had mentioned the same thing with like the Facebook, kind of looking like a cup with a bit of a handle here. And that's at new highs here. Let's take a look at the Amazon. Somewhat similar, right? So cup with handle, and that kind of broke out as well. So we look at these stocks when they're forming chart patterns because it helps us to understand which stocks are under accumulation. Let's move over to our commodity space here. So taking a look at the gold here over the last couple of days, look at that, right? Knocking its head right against those 1220s. That's an area I had pointed out over several videos here. Those 1220s represent somewhat of the high point. And if you look at this overall chart pattern, it almost feels like it's forming a bit of a handle here. So any strength above these 1220s, and I would expect a little bit of a bid to start building in the gold. We've been battling it out here now for about 2.5, 3 weeks, these 1200s, and those 1200s, I had identified those because it's just a prior area of support, and now that you undercut it should offer some area of resistance, and that's what we're seeing, right? This battleground, this inability to just trade higher, it's actually encountering some sellers at that area. that's what we look for. So, folks, if we can get above those 1220s, I think 1250s are next on deck, and that just represents those prior support levels from earlier in the July-August period of 2016. Moving over to the bonds, as we had mentioned, Wednesday did have those FOMC minutes, or not minutes, but the actual rate announcement. And as you can tell on the bonds, still stuck in this range between 125s down to 123s. So no directional tell here just yet, but any sort of trade outside of these outer extremes, and that would be somewhat your directional bias. Same thing with the crude. Even though we had crude inventories on Wednesday, no real tell either but down below the 51s or up above the 54s. So if you can break out of either one of those extremes, that would give us some directional bias on which way to take a trade, potentially in maybe some energy names. And then as we move on to the individual stocks, so folks, remember how we took down that GKOS the other day? It was a really nice breakout. We were looking at this as a cup with handle, and it had this great breakout. I'll show it to you on the intraday charts here. We took it down right above these 3940s. It ripped right away all way up to the 4150s, actually kind of forming a bit of a high handle at this point. But the reason we tracked this stock initially, the reason why we're even looking at this stock, is it was showing us relative strength in a downtrending market. So over the last few days, the market's been kind of fading off, and we've been seeing the stock go sideways, and that to us is relative strength. That's why we're tracking this stock. It's got a great relative strength. It's got a great chart pattern, and then when it started to break out with some volume, that's where we hit it. That was our trade setup. So something similar happened to us on Wednesday, which is this NXST. You see how on a daily chart, it's kind of forming this little flat base in this area. It's got great relative strength. And by the way, as the market over the last few days has been selling off, let's just pull up the NASDAQ, right? You see how the NASDAQ has been selling off. S&Ps as well has been countering a lot of selling here. When you look at this NXST, it's been going sideways during that period, just backing and filling. And when it started to break out here, that's where we took the trade. And in fact, on Tuesday, we had taken the trade right over the 65s. So you can even see here on an intraday chart, there's almost like a bit of a cup with handle, right over these 65s. So we took this trade right over the 65s, and here's again another great example of a day where, you know, the S&Ps were relatively weak the majority of the day, right? So gapping up and then fading off. And then this NXST here gaps up and just trends higher all day. And the reason this happens is we're looking for stocks that are exhibiting signs that they're already under accumulation. That's what that relative strength tells us. And now here's a day that's down, and this stock, just people are still trying to buy this stock, and it just breaks out. We had a great trade on this. And this is the main thing, folks. If you don't have a program that or a software that helps you filter out these ideas to look for relative strength, if you don't know how to do that, hey, I'd highly suggest you hop on one of our webinars. We'll show you how to look at the chart patterns, how to filter out the best ideas so that you're always looking at the highest relative strength names. I highly encourage you to hop on those webinars. But other than that, folks, you know, just keep looking for the best RS stocks, the best relative strength stocks, breaking out of recognizable chart patterns, and preferably doing it on volume. Look at the great volume that came in today. That has been, always will be our game plan when we're looking for stock breakouts. But other than that, wishing everyone a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.